All right, we're going to get rolling.
They helped create an economy that was completely addicted to cheap money.
You need to buy savings bonds or something. You need to be way, way, way out of this space.
I subscribe to Miss Piggy's rule of money management. Always manage to have more money, you know what I mean?
It wasn't but 2 years ago that everybody was saying China's economy was going to be bigger than that of the United States. It's gone in the exact opposite direction.
So we're going to jump right in.
Welcome to This Week in Mining, where we talk about making money in the mining and the metals market. My name is Jay Martin, and my guests today are Andy Schectman and Shawn Khunkhun. I'm very excited to chat with both of you gentlemen because there's a lot going on. So we're going to cover a ton of ground, but I want to start with Andy. I'll throw it to you. Your take on markets. Massive correction this week. We kicked off the week with a huge correction. You can walk me through the lead up to this if you want, the catalyst for that, for anybody just like super quick. But more importantly, Andy, I'm curious if this impacts at all your medium to long-term view of things.
No, it really doesn't. It reaffirms my concern that we're really skating the razor's edge. I mean, go back a few weeks ago, a bullet an eighth of an inch separated calm, relative calm, and chaos. And I guess you could say the same thing about the markets. I have always said that I thought we'd wake up on a Monday morning to some form of chaos. And I still think that holds true, not independent of what we just saw. But in reality, what we just saw was an unwinding, perhaps a pricking, if you will, of the everything bubble that has in large part been a function of the Japanese carry trade, where investors could borrow money in Japanese yen at next to nothing, convert to another currency like US dollars or Australian dollars, buy an asset paying a higher interest rate, say 5% on 6-month treasuries, short-term treasuries, and capture that spread. And that's great, amazing. I mean, it's free money until things start to change, like the value of the yen or the underlying value of one of the assets. And that's what we are seeing, this massive unwinding creating margin calls. And I think that's emblematic of much of this over-leveraged, undercapitalized economy that we live in. Do not expect this to be a one-off. I would say it's the beginning of more to come as we head towards great volatility in what should be the biggest, most relevant, important election in U.S. history.
Right. So at the surface, it was just a smart arbitrage opportunity. Borrow cheap in Japan, invest in higher yield in the US. And that works as long as Japan's currency continues to depreciate against US dollar, making this a safe trade. But as soon as it doesn't, it ends really quickly. Now, I've heard reports that up to 10% of the US equity market was held by the Japan carry trade. Do you think that's accurate? And if it is, how far have we unwound what needs to be unwound?
I think it's probably more than that. I think you could say the same thing about the crypto market, about a lot of things. And I don't know how much has unwound. I wouldn't say all of it yet, but certainly there were margin calls that unwound a good chunk of it. But I think that when you have an opportunity that has stayed solid for a very long time, it's built up tremendously. These traders felt it was free money, and for a long time it was. I guess we'll have to see what happens with the yen. You know, it's as strong as it's been since the end of World War II, or the beginning of World War II. The bottom line is that I think that this is not over yet. I don't know how much is unwound, but I would think that 10% would be very conservative. My guess it would be much higher than that.
Really? And Shawn, I'd love to know your perspective on that, because last time I had you on the show with Ted Butler, it was maybe 3 months ago. And one of the last things you said during that interview is all eyes should be on Japan. And here we are 3 months later, and there's quite the fallout. So, I'm sort of surprised when traders get caught so flat-footed in circumstances like this, because in hindsight, everything's obvious. Now, I realize that's not how life works. But, what's your take, Shawn? Were you surprised by how steep the correction was this week, by how the fallouts occurred thus far? And does it impact your long or midterm outlook at all?
Great question. I guess, number one, and this goes beyond Japan. In the last 15 years, we've been programmed to live in a universe where, bad news was good and good news was bad. And, we're now at a place right now where the news is so bad, it's bad. and that's a new world we're moving into. The second part of your question is, what does this mean longer term? And I think of I don't know, what comes to mind for me is technical analysis and like a head and shoulders image in my head, and I just see where we had the Tuesday turnaround Tuesday. It started in Japan yesterday, where we're starting to come back a little bit here, but ultimately we are headed lower. If we fast forward 3 months, 6 months, 9 months, Andy nailed it. Get ready for the volatility. Volatility's back, and and I think there's a lot of investors that are going, "Oh, this is a great buying opportunity." Buy the dip. I'd be very cautious. I'd be extremely cautious. I'm 20% over 20% cash right now, and I've never been in that type of position. And a lot of people would say, "Well, Shawn, you know what? You're losing 6, 7, 8%. You might be getting paid 4 or 5%, but real inflation's running double digit." But you know what? For me, it's not about what I'm losing. It's about not getting wiped out and being in a position to step in when I think there's the real opportunities present itself. And again, I think all of us, I talked to Andy about a week ago. We had a really good conversation, and I think we are in the right asset class that's going to, it's going to attract capital. You look at the way everything was falling starting on Friday, and you look at how well gold has hung in. It's been an absolute champion in an environment where things are there are double digit losses. Gold was off 1%. Big deal, right? So on a relative basis, it's totally outperforming. So, to answer your question, I think there's a lot of pain coming, but there's probably some stability that we're going to see here because you have so many investors that, have the FOMO, have been conditioned over the last 15 years that somebody's going to come in and bail them out. And, this is bigger than all of us. This is bigger, this is bigger than any central bank. And it's coming to a very, very nasty ending. And that's why, we've been all big proponents of being in real assets, being in gold and silver.
Yeah.
Jason, can I add one more point since we're just to top off the yen as it relates to gold, dovetailing on what Shawn just said. 10 years ago, an ounce of gold was 140,000 yen. Last July, a year ago, 2023, was 278,000 yen. And today it's 345,635 yen. That's a 40% increase in 1 year. But look what it's almost tripled in 10 years. This is not gold going higher. This is a classic illustration of a currency collapsing. And gold has done what it's supposed to do in the face of a currency collapsing. And then when you see the intervention that comes in to rectify that collapse in their own interest, the reverberations that it's had around the globe in terms of all of the players who have been playing that spread that very quickly became unequitable. So, but the moral of the story is that gold has done what it's supposed to do in all of the currencies around the globe, a little bit muted in US dollars, even though it's at all-time highs or near it. But in Japan, in a situation where the currency is in trouble, it has done what it's supposed to do. This is why you own gold, because it's wealth. Not to become wealthy, but that it is wealth that will protect you in an event just like we're seeing unfold right in front of us.
Okay, so I have to ask you a follow-up question there. Gold did what it's supposed to do. There's a lot of people saying Bitcoin did not do what it was supposed to do. Now, this is, I think, another stress test of what that asset may or may not be. And the jury's out for me, to be quite frank with you. I don't qualify it yet in terms of what it will or what it is or what it will become. But what's your take on that one, Andy? Because a lot of people are saying the lifeboat didn't work, those that were also hedged into Bitcoin.
Yeah, like I said, when you asked me the question, I think that Bitcoin was a benefactor of the carry trade as well. And the financialization of the Bitcoin market, it lost some of its purity when Wall Street got involved with ETFs and the ability to hedge it and trade it on COMEX. So you have so much leverage built into the system that was built on margin or built on a carry trade, and or built into a system that is financialized. And as financial assets run into stress, to think that Bitcoin would be immune from that is a mistake. I'm not speaking to Bitcoin not being a alternative asset. It sure is, but it's not digital gold. It is a speculative asset. And I don't think there's ever been a time where gold has fallen by 30% in such a short period of time. So that's the difference. It's an asset that in some respects mirrors gold's fundamentals, the objective of gold, the decentralization, the private holding of wealth, et cetera, outside the system. But it just goes to show that you get Wall Street involved, much to the way that they're able to drive the price down through naked shorting and leverage on the COMEX. This is about financialization. In the end, shake all of that off. Bitcoin is still an asset worth holding, but I don't think it should be viewed as a safe haven asset as much as it is a very speculative asset that can make you rich. But again, that leverage cuts both ways, and this is what we're seeing on the downside here.
And so whenever we see trust shaken in the status quo plan, and maybe the status quo plan was like exactly what you just said, continue to double down into broad equities and spec markets. I mean, investors are making a lot of assumptions over the last, at least the last year, but longer, right? That the U.S. economy is unstoppable, that AI will eat everything and optimize businesses, and we can grow our way out of some of our problems, and that Japan will never increase rates. I mean, those are three big assumptions that a lot of investors are making. So when you shatter your faith in a system that you believed in, you redirect your capital flow as a consequence. So money is going to leave a handful of things probably and go somewhere else now. I've got some suspicions towards stability, but Shawn, I'd love to know your take in terms of capital flows. Has trust been shaken enough, do you think, for more investors to look for new opportunities and new directions and maybe more security and less volatility? Like, what's your take on capital flows at this point?
Well, I think one would think if we look at the gold miners and we look at Agnico Eagle, or you look at Newmont, they're putting in 52-week highs. You know, you've got Agnico over $100 a share, Newmont over 50, paying good dividends. You know, I think Newmont's on pace for like $2 billion this year in revenue. So, you got to think, if you're a money manager out there, your job is to try to find growth and to try to find appreciation, and the miners are doing it, right? And it's incredible, at $2,400 gold, and with the industry average all-in sustaining cost around $1,200, there is an absolute mountain of money that miners can make. So, unfortunately, though, we're not really seeing it. You look at the funds, the gold funds, they're not seeing inflows, and so it's a very, very small minority of investors who are taking these stocks to 52-week highs. We haven't seen the generalist money come in. I have, I've got a few big fund managers that, in my favorites on my phone that I talk to regularly. And so, what I'm starting to hear is from these college endowments, they're starting to look at thinking about putting money to work, right? So we're starting to see, big funds inquiring about the space, but action hasn't occurred. So, it's all about capital flows. We haven't seen it yet. We still got a lot of the funds facing redemptions, and but it's starting. The questions are being asked, and I think you get a few more Mondays like we had yesterday, and those conversations are going to be turning into actionable items.
Yeah, 100%. That makes all the sense in the world to me, because after a day like we had this week, the next thing that happens is a lot of people are sitting in the boardroom rethinking the thesis and saying, what did we believe? What should we think about the future? And as you mentioned, maybe they have not started allocating capital to the funds yet. The inflows aren't there yet, but the conversations are occurring. The inquiries are occurring. Questions are being asked. And it just takes a catalyst, right, to push somebody over the line, to change direction. I mean, by nature, inertia is very real, right? Like, we'll keep doing the same thing for as long as it kind of works, right? And as long as we're okay, until we're forced out of that path, we're rare to make a change. And okay. So I want to.
Jay, just on that thread, one last thing. What I'm seeing from corporates is I'm seeing a shift from being defensive to offensive. So we're now seeing corporates looking for growth. We're seeing M&A activity increase. We're seeing financing activity increase. And so I believe the companies, the corporates, the miners are getting ahead of that demand they anticipate coming in.
That makes sense, which matches the growth mandate of these funds as well, right? They want to see a corporate play no fence for the same reasons. It's kind of a chicken and the egg thing, right? Which is going to go first? Does the capitalists show up, or do the corporates get aggressive and start showing the capital they're poised for growth? I want to pivot to the concept of de-dollarization here, because there's one concept, Andy, that you've been covering more than anybody else that I follow, and that is Project mBridge. It's now a term that gets thrown around a lot in conversations on channels like mine. I wonder how many investors actually understand what the significance of Project mBridge is and what it's competitive to. And so if you could, at a high level, just walk the audience through the trajectory of Project mBridge and what's on the table today, what it is exactly.
Yeah, so many of the things, Jay, that I think are so important about the future of the dollar and the trajectory of the country are not reported or talked about. mBridge is something I've talked about in, I bet you, 100 YouTube videos over the last year and a half. It is a cross-border, decentralized platform for payments and foreign exchange transactions in digital currencies, central bank digital currencies. And it was developed by China, Hong Kong, Thailand, and the United Arab Emirates. And it's backed by the BIS. And I want to phrase it that way for just one moment so people can understand where I'm going with this. But it is a platform that allows for trading of central bank digital currencies with one another. Now, I've been saying for a very long time that it's my belief that gold and oil have been remonetized globally. You can see oil in the fact that Iran awarded China a massive remodernization contract to remodernize their biggest airport, paid for it $2 billion worth of oil instead of US dollars. There's your de-dollarization. And of course, gold, as we know, the only other tier one reserve asset, is being gobbled up by the central banks at levels the world has never seen. Now, I think it's important when we talk about mBridge to understand that Saudi Arabia just became a full participant. So you have the original participants, China, Hong Kong, Thailand, United Arab Emirates. You have the BIS backing it, and you have 25 countries that are observers. And then there's Saudi Arabia, the largest producer of oil in the world, is a full participant now. US dollars are not compatible on Project mBridge. Look at it as a way to trade central bank digital currencies back and forth with one another, free from the Western intermediary banks, no SWIFT. And going back to gold and oil being remonetized, the first two trades that we saw that were deemed test trades in 2023 were between China and the United Arab Emirates in gold and oil using digital yuan. They both worked. So mBridge is in its most basic form right now, operational, with a whole lot more expected to be brought to the fold. But I want to bring in both the BIS in this and then talk about the unit token, because it's really important. And now maybe I'm thinking a little too deep here, but maybe I'm not. I want to go back to 2017 for just one moment to frame the way that I think the BIS operates. When the Bundesbank made a really big public admission in 2017 after 2 or 3 years of trying to get their gold back from the United States. So, you know, most of the gold in the world has been held in the U.S. and in England. Bank of England giving direct access to the LBMA, the New York Fed direct access to the COMEX, stable jurisdictions, Western rule of law, LOL, all of those things that are important, right? And so what we have seen, if we go back to 2017, we see the Bundesbank say, give us back all our gold. But shortly after that, the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank, the Dutch National Bank, All of these banks said the same thing to the BIS. After 6 years of gold going straight down, they said, give us back, or to the, excuse me, not to the BIS, to the Bank of England, the New York Fed, give us back our gold, which was very strange. The following year in 2017, those same banks, or 2018 rather, those same central banks bought more gold as a group together than they did in the 60 years previously combined. And then in 2019, the following year, those numbers were up 100%. And then miraculously, coincidentally, the BIS said, oh, by the way, guys, gold is now the only other central bank tier 1 asset. Now, you know that they informed the Western central banks of Europe, go ahead and start gobbling up your gold and bring it home from the Bank of England and the New York Fed. We're going to reclassify it tier 1. So let's fast forward to where we are right now. There was a big meeting that happened that coincided with the G7 meeting in Italy just a few weeks ago. At the beginning of the year, we were told that there would be 200 BRICS meetings leading up to the one big one in October, where we find out all the new things that the BRICS have agreed upon, including which countries have joined. This meeting in Novograd, Russia, was the same week as the G7 meeting, and the Royal Crown Prince of Saudi Arabia was invited to the G7 meeting. And they turned it down, said, I'm busy, guys. But he sent his finance ministers to the meeting in Novograd. Now, remember what I said about the BIS. I believe they told all these central banks 2.5, 3 years in advance, get your gold home and start buying it. We're going to reclassify it tier 1. That isn't coincidental, the way that it all worked out. Out of nowhere, they massively buy and bring back their gold after years and years and years of it being held in the West. And then all of a sudden it's revalued tier 1. Well, let's talk about what happened at this meeting in Novograd. 2 things that are worth talking about. Number 1, they came out and said 59 countries have formally applied to BRICS. We don't know which ones they are. But number 2 was 2 meetings that were announced by Dilma Rousseff. Dilma was the former president of Brazil. She's the head of the BRICS New Development Bank. Call that very similar to the IMF. And she came out and said that I had 2 meetings on the sidelines with Sergei Glaziev and Putin. The reason that in probably 3,000 YouTube videos over the last 4 years that I have said that the BRICS will have a commodity-backed currency is because he said it. He is the architect of this new system. He is the Eurasian Economic Union chief economic advisor. He's high up in the Russian finance ministry, and he is the architect of this new system. And she said, we've agreed in principle to a new system called the unit that will be traded over Project mBridge. Now, the unit, she says, will be 40% gold. 40% gold, not a basket of commodities like Glaziev originally said. Probably too hard to value all of those individual commodities. But it will be 40% gold in kilobar form, deliverable upon request, and 60% BRICS plus local currencies. Now let's go back to the BIS and the way that they do things. A simple Google search will show you that within the last 2 years, Germany, Austria, Slovakia, Argentina, the Netherlands, Saudi Arabia just a few weeks ago, Hungary, Belgium, Egypt just a few weeks ago, Romania, Nigeria just a few weeks ago, Poland, Ghana, India bought 1.5 times the amount of gold they bought all of last year in the first 4 months of this year, brought it all home, plus 100 metric tons they've held at the Bank of England since 1991, brought it all home. Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa just a few weeks ago, and Czechoslovakia, and many more, all brought their gold home. Now, why? Now, the conventional wisdom would be it's the weaponization of the treasury market, or the way that Venezuela didn't get their gold back from the Bank of England, right? Where is the trust in the Western system? It can be taken, right? That's the easy answer, but it's not the right one, in my opinion, because in reading the white paper of the unit, it says that the gold that will be used to make the unit token and the 60% basket of local BRICS currencies will all be put into escrow accounts to create the unit token within the borders of the countries that possess it. In other words, they don't all need to send their gold to Moscow or Beijing to a central unit. They will all be able to hold their own gold and their own basket of currencies of the local BRICS countries in an escrow account that will be independently and frequently audited with massive penalties for deviation from the protocol of the unit infrastructure. In other words, what the project mBridge is allowing. Now think about the BIS. I think the BIS said, here's our new settlement token for the BRICS. You guys all want to bring your gold home because you're going to hold it within your own borders, which will eviscerate the demand for U.S. dollar stockpiling and eviscerate the demand for U.S. Treasury stockpiling. Instead, they will all accumulate their local currencies and others. And this is why in a video I did with Vince Lancy, he thinks that China and Russia will back their currencies by gold so that they comprise the majority of the 60% backing in the currency portion of the unit tokens. But the currency and the gold is held in an escrow account within their own borders and audited independently. So the BIS probably said to all of these countries, get your gold home, you guys, and keep buying it. The central banks are buying it hand over fist, and all we see is repatriation. So mBridge will allow all of these countries to maintain their own ecosystem in central bank digital currencies. If you take all the global GDP and give it a percentage of 98%, or the countries that make 98% of the global GDP, every one of them has a central bank digital currency, either operational or in development, near operation. So all of these countries will have their own monetary autonomy, their own central bank digital currencies, like the digital yuan, the digital ruble, the digital real. There won't be a central common BRICS currency, but a central settlement currency. Everyone has their own central bank digital currency that will trade over mBridge to buy things with all of these other currencies, with all of these other countries, free from the Western intermediary bank or the SWIFT intervention. And if indeed it comes to settling for things like energy, they will use the new token called the unit, which Delma Rousseff said we have agreed in principle to doing this, 40% gold backing and deliverable upon request. They have scheduled a meeting in China in September to ratify it with potential of bringing it out in October. I will just simply say this to you. If indeed this happens, the fuse has been lit just like that. We've lost the hegemony already as oil sales are being done in other currencies, in Saudi Arabia not signing the re-exclusive deal that they've had in place for 50 years, saying we're going to trade in all currencies, dollars included. But the supremacy, that fuse will be lit if they come out and say, we have agreed on a new settlement currency for oil, and it is called, or energy, it is called the unit, gold-backed and BRICS plus currency-backed. The need for these countries to continue to hold dollars and or treasuries dies that day. And that becomes the moment where things start to rapidly accelerate. So it's as big of a deal as anything I've ever seen. And the lack of talking about it, the lack of any Western media discussion of it is criminal, in my opinion. Now, granted, nothing has been decided. But when you have the former president of Brazil and the head of the BRICS New Development Bank with Sergei Glaziev and Putin, who said we've agreed in principle, I believe it, because everything else that they have said that I've reported on for 4 years, it's all come true. This will come true too. This is why the central banks are buying the hell out of gold, using the suppression of the Western market to run cover for it. And more importantly, this is why just in a simple Google search, 30 central banks have repatriated their gold within the last 2 years. And there's a lot more because they know they can hold it within their own borders, remove counterparty risk, cut out the Western influence, cut out SWIFT, cut out the dollar, the chance of weaponization or confiscation of assets, and have their own ecosystem that they will maintain with the ability to settle oil in this new unit. And I think it's the biggest thing I've seen maybe in my career if it plays out this way. But there's no other reason for the BIS to reclassify gold tier 1 and to tell all of these central banks quietly, buy it and bring it home. Where there's smoke, there's fire. Follow the crumbs. You don't need to be a rocket scientist to see the crumbs they're laying at our feet.
So the unit is the linchpin because the biggest resistance argument to the topic of de-dollarization is that, sure, countries can go ahead and trade in their own currency, but what's Saudi Arabia going to do with a bunch of rupees? Like it's useless to them, right? And so you can't just abandon the US dollar because you can't abandon the rails on which international trade is done. That is what Project mBridge facilitates, is a new railway system where this unit
that is not
allows,
compatible with dollars that Saudi Arabia is a full participant in. Yes, it is 100%.
Okay, which is the real world reserve currency being energy, you could say. And this allows countries to settle transactions in their own currency. And I was wondering, does this like reduce or delete the need for an international unit of settlement? That's what I was wondering about. And you're saying, no, this is the unit. This is the 40% gold, 60% basket of currencies that will be used as the trade currency. So this is not a reserve currency.
And that's why Vince says he thinks Russia and China will do all they can to back their own local currencies with gold to whatever degree they can so that it comprises the majority of the allocation in the 60% basket. And they can trade their currencies over mBridge to whatever degree they want. Okay, I have enough rupee. Now I want unit for whatever else we're going to sell. It gives them alternatives without one central currency. It allows everyone to manage their own affairs prudently.
Yeah. Yes. Okay. Got it. And focus on the trade currency, not necessarily the reserve currency at this point. You know, this will be one of those questions, one of those situations where in hindsight, it was all obvious. I mean, as I hear you explain it today, it's like, this is another one of those things where, you know, whenever that bill comes due, 6 months, 3 years, I don't know. But when it does, we'll look back on the activities of today and say, oh man, in hindsight, it was all so obvious. So Shawn, I want to pivot to you because you're tracking this same concept, mainly focused on precious metals acquisition of the central banks. You know, where does the smart money go today? My audience is retail investors, right? That's who watches my show. They're people just like me. I'm a retail investor looking for the smartest home for my cash. So where does the smart money go today?
Good question. I just got to say before I answer that question, you know, for anybody who's new, anybody who's hearing Andy for the first time or coming to your channel for the first time, I've been watching Andy be spot on calling things before they happen. So, you know, his credibility is, 10 out of 10. And, Andy, when you were talking, man, you're giving me goosebumps because I've been watching this play out and studying it over the last 20 years. And, some events started flashing in my head, like, whether it was 2019 where gold finally lifted through 1,300 when it was being called a tier one asset. And just thinking back to different conflicts that have happened in the world, coincidentally, company calls for their gold, the U.S. invades a nation that has some gold. And, I've always wondered what it would have been like living through a time where it was illegal to own gold, only to have, once all the gold was confiscated, to be revalued at twice the price. And I feel like I've just gone through that period in 2019, 2020, where we've seen gold go from 23 to almost 2,600 here, and I've lived a moment. I've lived a moment that I've been But to answer your question, Jay, look, and Andy and I talked about this last week. You got to start with the physical. Do what the central banks are doing. Be your own central bank. Get physical. Andy's got a company that's tried, trusted, and true that all these viewers can go to in Miles Franklin and buy gold. He's your source for the physical. If you're wanting to go beyond that and you're willing to put in the work that's required, if you want leverage on that, you can start owning equities. Right. And you start with the royalty companies. In gold, it's Franco-Nevada. In silver, it's Wheaton Precious Metals. And then if you want to go beyond that, you buy the producers, you buy the developers, and then you buy the explorcos. And look, this is not investment advice, obviously, but that's what I'm telling you what I'm doing. I own physical. I own the equities because the equities, in my experience, give you the leverage. Right? An Explore Co. that goes out and finds 10 million ounces of gold There's a tremendous value creation exercise there. So, that's what you do. That's the action item. There's an opportunity not only to preserve your wealth, but we're going through the greatest wealth transfer in history, right? And, it's overwhelming. And there is a little bit of uncertainty of exactly what it's going to look like, right? We don't know. It is a moving target. But what you can do in the meantime is do what all those central banks that Andy just mentioned. He went through a list of about 23 different central banks around the world that have been stockpiling gold. I'll never forget. I remember when India went out and gold had just gone through 400, 500, and at $900, India went out and they made this massive purchase of gold. And I thought, wow, and we're going to see more of that as the price goes, to 3,000 and beyond. We're going to see monster transactions, monster individuals. You'll see the Buffetts of the world. You'll see the big central banks of the world, and they'll, the market moved on Buffett selling half his Apple. Wait until Buffett, comes into gold, right, in a big way, and get ahead of that. Get ahead of that. This is why do you think it is gold's outperformed every other asset under the sun here since 2000, right? Why? What is happening, and why is it on a day where world markets are off 10%? One of the greatest single market decline days in decades. Gold's almost unchanged. That should tell you everything in the last couple of days here.
Yeah, I love the be your own central bank and do what the central banks are doing. They're not buying NVIDIA stock. That's for damn sure. They're buying physical and they're sitting liquid. Warren Buffett right now is on $250 billion in treasuries in cash, $250 to $300 billion in cash. You both mentioned your cash position. What's interesting to me is we look at record gold prices right now. We look at the central bank buying trajectory and very little participation from funds, private equity groups, retail investors, high net worth investors, celebrity investors like Buffett. Eventually gold will probably enter a bubble, right? When all of this comes to reckon, right? You could imagine that we'll see a bubble inside of gold. And we are so far from the first ripple of anything like that because of the lack of participation from the masses almost entirely. Andy, anything to add to Shawn's capital allocation strategy for those looking to get ahead of this car crash? I do exactly what Shawn's saying. Actually, I look at the smartest money I can track and I follow their lead, right? And so when I saw central bank gold buying hit all-time highs like 18 months ago, I started piling my own physical and really increasing my personal allocation of physical. And it's the most boring asset I own, and that's the point. And when people tell me like, oh, gold does nothing, I'm like, yeah, exactly. Like that's the purpose of the safe haven asset class. It's not supposed to have the volatility of a cryptocurrency. Anything you'd add to capital allocation right now, Andy?
Yeah, real quick, just as far as gold is concerned, that's the illusion. Jay, you and I both have a long history in this industry, lot longer than most people. And to think gold at 2,400 would, if someone told you when you were watching gold at 400 that it would be 6 times higher and would be hardly noticed at all by the public, you'd say, I'll bet you everything that isn't true. But it is. And it's because instant gratification is not fast enough for people in the West because of Bitcoin, because of NVIDIA, because of Apple. But here's the interesting thing. Let's take Bitcoin out of the equation, okay? It started from zero. It did its thing. But since 2000, gold has outperformed every single traditional asset, including the S&P 500 with dividends reinvested, which is about 9.5% compounding. Gold is 9.9% compounding. It has outperformed everything. It has doubled the performance of the 10-year treasury. It is the tortoise, not the hare. And it is the people watching the race that say the tortoise doesn't do a damn thing, but it wins the race. Those same people are making the, I would say, unastute comment of that gold doesn't do anything. Quite to the contrary, it does. And it is because criminal enterprises like the LBMA are allowed to trade in gold 200 million ounces per day. Now, they say they're only doing 20 million ounces per day, but they admit that their settlement numbers are 10 times understated because they only post the final settlement numbers, not all the trades that take you to get there. So they're trading 200 million ounces of gold per day. And using the same logic in silver, almost 3 billion ounces of silver per day, which is 3.5 times annual global mine supply per day. Where on the COMEX, they can rehypothecate the price of gold and silver, rehypothecate those contracts many hundreds of percent over what is actually available for delivery. The distortions created by the Western paper markets are being exploited by the countries around the world who are using it to their advantage. And for a moment, if you think they don't know it, I got a bridge to sell you. They just developed the BRICS grain exchange. And the head of the BRICS grain exchange said, we produce more wheat than the West does. We consume just as much, yet we have no control over the price. It's all priced on the COMEX. That's going to change, he said, when the BRICS grain exchange comes about. The head of the Shanghai Gold Exchange said, when the Chinese are allowed to speak at the gold table, he said this in 2015, the real price of gold will be observed. They know exactly what the West has been doing by holding back the price of commodities to accentuate the value of a bond market and a currency market that were illusionary. And they know that, and they're using it against us by using that leverage to stand for delivery. The standing of delivery, the first step is to drain all of the Western exchanges. The second step will be, and it's just happened, the Shanghai Gold Exchange, the combined volume in the Shanghai Gold Exchange and Futures Exchange is up 200% in the last 100 days. It's now has a greater cumulative volume than the COMEX does, making it number 2 on the planet after the LBMA. The first step is to drain the Western exchanges slowly and methodically, not too fast, but slow enough so they can milk as much out of the system as they can. The second step would be to move the price setting mechanisms to Dubai, to Moscow, to Beijing, where they are real. They are not levered to the degree that they are in London or the West. And the third step is to jack the prices of mining shares through the damn roof, because these assets are depleting. These assets are not, they're not commodities, they're strategic. And the rest of the world knows that. And they are accumulating what is strategic assets. If you believe Zoltan Pozsar, as I do, that Bretton Woods won when we took over for the pound sterling. That ended in 1971. Bretton Woods 2 loosely when we became the petrodollar. You could argue that just ended a few weeks ago. I mean, not completely, but the severing of that exclusivity is over. Bretton Woods 3, he who's got the commodities wins. It's always been he who's got the gold. Well, that too. But like the Chinese buying the London Metals Exchange, all the base metals, warehousing now, or building warehouses to warehouse those base metals in China that are traded in London, striking deals all around the world with their Belt Road and the BRICS in resource-rich, underdeveloped countries. They know where we're going, and they're playing us. They are using the idiocy of the U.S. and the Canadian governments that suppress the hell out of the price of gold, the Western governments and the U.K., to maintain this illusion of Western prosperity. They're using it against us. And so, yes, there is no better place to park your money than in pure wealth, gold and silver. And as far as an investment is concerned, I don't see a better one even remotely close than these underloved, underappreciated mining shares that when the public wakes up, if you are all three of us have a mutual friend in Rick Rule. Rick will tell you, if you go from the Harvard Endowment Fund all the way down to Joe and Jane six-pack, as he always says, 0.5 of 1% allocation to metals and mining shares. Make that 5% or 10%. You're talking a 5 or a 10 or a 20-fold increase in demand. You'll make more money in an allocation of mining shares than you ever dreamed of making in NVIDIA or in Bitcoin or any of these things, because the world is moving to a new system, one that has lost trust and confidence in the fiat experiment. And we are moving to a system, as Zoltan Pozsar says, Bretton Woods 3, one based on commodities and transparency, a la blockchain. Blockchain and commodities. And what better place to do it than after you have your physical allocation to buy quality mining shares and listen to guys like, all the great guys at Rick's show or Shawn here who's telling you how important owning mining shares really is. And it's true because the world is shifting that way. And yet the people in the West, they're asleep at the switch. When they finally wake up, it will catapult not only the physical price of metals, but the mining shares to levels that people would think are crazy. And I've seen it before. Early in the days, in one mining share that I bought, I talked about this with Shawn. I bought a stock for 6 cents. It was called Western Copper. I put $9,000 in it. It changed its name to Western Silver, which changed its name to got bought by Glamis and got bought by Goldcorp. And I turned $9,000 into almost $750,000. And that will happen to average people who allocate to mining shares, because I believe this is a once in a generational move from fiat and opaque debt promises to transparency and commodities. And if it's becoming that hard to get metal across the globe with virtually no American participation, when they wake up, the need for quality mining shares is extraordinary. So yeah, that's what I would add to it. And it's not salesmanship. It's not hyperbole. I believe it in my soul that it's as important as anything, and it's in the ground and it's needed to move forward. Couldn't think of a better place to put my money.
And what Andy and Shawn are both talking about is a reversion to the mean. When you say shifting to commodities, I want to emphasize it's shifting back to commodities. And on my channel here and on the Jay Martin Show, we spend a lot of time talking about history for that reason, because you can go back as far as you want, but even just the last 600 years, you'll see power always gravitates towards those who control the stuff. And the stuff of value changes generation over generation. But if you track the Portuguese, Spanish, Dutch, British, or American empires over time, he who controls what's in the ground, that's where power ends up. And we're seeing shifts like that occur right now. But that's why I say this is a reversion to the mean. This is where we always end up going back to, right? Okay, look, I want to thank you both so much for your time today. This has been an absolute blast and incredibly enlightening. I love picking both of your brains. Both Andy and Shawn are going to be at the Vancouver Resource Investment Conference in January in Vancouver, BC. An absolute blast. Come join both of these gentlemen, in addition to another 80 to 100 keynote speakers that'll be taking the stage over the course of 2 days. And thanks again, gentlemen. This was a pleasure. Absolutely.
Yeah, honor's mine with both of you guys. And as I tell everyone, there are two shows that I go to, yours and Rick's here down in Boca. They're the only two shows I go to. I would never miss your show, and I implore people to go check it out. It's as good as any you'll ever go to.
I just got to say, normally I'll be at home watching a video, and a moment like we just had that Andy had on this segment where, like I said, I got goosebumps, Andy, and to be here with you in that moment when you just laid it out, it was incredible. So grateful for you both. And I look forward to seeing you soon.
All right.